Hi, this is Dustin with Dustin's Dollars. Today I'm going to be talking about Knightscope's 2022 Q3 quarterly results that just came out today. And I'm going to be going through giving you my thoughts and what I took away from it. Before I begin, let me remind you that I'm not a financial advisor or a financial professional of any sort. All opinions that I express in this video are mine and do not represent those of any company or any other individual. I currently hold a long position in Knightscope, so this video should be for your entertainment purposes only because I could be wrong about everything I say in this video. You need to do your own research before making any investment decisions. All right, so let's get into it. Knightscope reported their results today, and one thing I want to just state up front is that the acquisition that was closed in October of Case Emergency Systems that happened after the end of this quarter. Okay, so none of that is going to be reflected in the numbers that we see here today. We'll see that we'll see that in Q4, and then we'll see the full impact of that in Q1. Although there was one tiny little tidbit, which I'll get to later on, that gave us some insight into actually how much revenue they might generate from the case emergency systems. So let me go through sort of the headline here is that the revenue is up. This is their graph for every quarter that I've pulled the numbers myself. I have the graph here starting in middle, actually maybe even beginning of 2020, all the way through to this quarter, right? This quarter is this final dot over here on the right. Maybe I can zoom in. Maybe it'll get a little bit bigger. That might be too big. Yeah, it's a little too big. My bad. But the point is, for quite a while, if you've been following the company, they were pretty flat because we can even extend this timeline back into 2019, and I think the revenue was fairly flat for a while, and it looked like Knightscope was not growing; they were stagnating. And if we look at the prior year, the prior 4 quarters, we've seen revenue increases, and in fact, we've seen this looking like it's accelerating here, right? Where this line is not only going up, it's going up even steeper into this quarter. And that's what I put as the headline of the video, is that Knightscope's revenue is up 65% year over year from Q3 of 2022 versus Q3 of 2021, right? We went from 784,000 all the way up to almost 1.3 million in terms of revenue for the quarter. And my prior, I think I did a video a month or so ago saying that, hey, we have some indications from the robots that look like they're deployed that it looks like the revenue might be up, by 13% quarter over quarter, but actually it was up 24% quarter over quarter, which is a pretty big number, right? That's huge. If they annualize that, that would be amazing. Now the bad news, right? So that's the good news. Revenue is up, but we don't, as investors, we care more about profits, not necessarily revenue. Revenue is sort of profit potential. But unfortunately, the margins did not improve at all. This is their graph of their gross margins here. Let me see if I can make that a little. There we go. So you can see the full graph here. Again, these are numbers for every individual quarter. And you can see that for the most recent quarter, their gross margins were still, negative 60%, which is horrible. And I've covered this in the past. I'm not going to go in detail today as to why that is, not exactly what you think it is, right? It's not that they're truly losing all of this money. There are some impacts of scale that go into this. There are some impacts of, some non-cash expenses that go into this line here. And I think these are actually, just as a side note, will be exacerbated, maybe exacerbated a little bit this quarter, but will definitely be exacerbated in the future as they have part-time operation of the robots. They came out with this not too long ago saying that they were going to offer part-time contracts. And unless they also adjust their depreciation, the lifetime of those robots, to account for the fact that they expect them to last longer and have lower service costs, then this is the gross margins for a period of time are going to look even worse, right? Until that depreciation sort of goes to zero and they don't depreciate those units anymore. So that is just something to keep in mind. And again, I would have expected, and I talked about this in the past, and I'm going to be looking this even harder in the future. I would expect these gross margins to improve as the revenue does grow, because the scale, there are some some portions of that gross margin here that are effectively fixed costs, at least as far as I understand things. And I know those right now are a large portion of their costs um, relative to their overall cost of revenue. And then as they grow revenue, I expect the portion that is represented by that fixed cost to shrink, and that would improve their margins. We haven't seen it happen yet. Again, this is what I do expect to happen for the future, so I'm gonna be watching for that in the upcoming quarters and over the next year or so. All right. So that was some bad news. Good news is, well, partially. This is also a one bit of good news, one bit of bad news. Their sales backlog is up substantially. Their sales backlog is up to they called it out as $2.5 million. Let's see if I can find this here. Yeah. So they're let me be more nuanced here. If you dig in here and you look at their 10Q, you dig down in this section, it says they have a total backlog of about $3.9 million, and that represented by 289 units. But they split that out, which is nice because they're mixing both some of the case emergency systems, phones basically, as far as I understand it. I really don't have a good handle on their product line, but I think they're mostly the emergency phones, mixing those with the security robots, which are very different products, and I'm not even sure what they get for the case units in terms of subscription revenue, if those are mostly upfront sales. But they did pick this apart and say, of that backlog, 49 units are autonomous security robots, and that represents an annual subscription value of about $2.5 million. So this, I think, that 49 units and $2.5 million is an apples to apples comparison with what we've seen reported in the past. And so, I have this graph here where you can see this is by far the largest backlog that they've had. And, that $2.5 million would represent roughly, if I could snap my fingers and they could deploy all those robots tomorrow and they could start, accruing that revenue from all of those robots in the backlog, that would be about a 50% increase on their current revenue, right? Their current revenue of, annualize that 1.3 to, what is that? About $6 million per year. Is that right? I should just get the calculator out. 5. I'm off. I apologize. Roughly about $5.2 million per year. That 2.5 is almost a 50% increase in their revenue. So their backlog is growing, and so this is both good because it shows that sales, sales are continuing. Right, when we see that their revenue is up, meaning that they have actually done some deployments this quarter. A good chunk of them, and the backlog grew even more. That indicates that sales are happening. Sales are up, but they're not actually deploying the robots, right? The backlog is growing too large for my liking, and I have no idea how many of these 49 robots, how many of these folks have been waiting, how many of them were already represented in the backlog a year ago, right? A year and a half ago in the middle of 2021, right? Are there some of these folks where are they really just that constrained on certain parts? It's hard to say, and they did have a specific note here. They called it out because it's pretty obvious anybody's looking like, hey, this backlog is growing. This might be a problem, right? You need to actually build these robots, get them deployed, or else people are going to start canceling their orders because you didn't actually give them a robot. You just signed a contract for a robot. They did call this out here, right? I'm going to just read it here. While the company believes the current backlog of work remains firm, prolonged delays in the receipt of critical supplies and materials, or continued increase in costs related to the rise in inflation could result in clients seeking to delay or terminate existing or pending agreements. So, I mean, that's a concern, right? Hi, Wakaza. Thanks for hopping on the stream. I'm just going over the Q3 Knightscope results. Just talking about the backlog right now, where it's good that the backlog is up. It's bad that the backlog is up and they haven't actually gotten through it, right? So sales are definitely happening, but the units haven't been actually deployed. So that's something to watch, and I'm hoping. I think we've seen. I guess I could pull it up here. They've had this posting on their career site for a production technician for over a month at this point. So I'm hoping that this means they are actually I'm hoping that they've already hired somebody. They didn't just haven't taken this down, or maybe they're hiring multiple technicians. Um, I don't know, but that is something that, to me, indicated that they need folks to actually assemble these robots so they can get them out the door. And so, cross your fingers. Hopefully, they can deploy a lot of these robots and chew through the backlog and start recognizing, a lot more revenue. One thing related to that I do track, if you dig into the 10Q, you can see how many, what is the value of all the robots that they have. And, so this continues to tick up, right? These are just accounted for as assets, all the robots. And then we also look at how much raw materials for building robots do they have on hand, and then, how much they have currently in progress. And the amount in progress went down slightly, but the amount of, raw materials just continues to go up, right? Which means they have a lot of parts sitting around. So I'm hoping a lot of parts, and now hiring a production technician, and having a lot of, contracts where folks are ready to get their robots, all that comes together, and they're able to deploy a lot of robots, soon, and increase revenue, continue that current path of, 25%, quarter over quarter will be great. All right, I got some comments on here. Well, Kaza says they're pushing sales hard. They practically work every day. Yeah, that certainly seems to be reflected here, right? Revenue is up, and the sales backlog is up, so sales seem to be going fairly well. And they've done a number of those robot roadshow stops, and I know I talked about when I got the stop there and see it. There were actual buyers there, folks who I think would be making purchasing decisions, folks who are responsible for security at some places in the area, and I can definitely see how they're actually signing contracts and getting sales from there. All right, Beef says, did the liabilities and debt increase? They mostly did not during the quarter. So I'll take a look through this, right? I think accounts payable may have been up ever so slightly, not too much, but they don't really have any debt, right? As of the end of Q3, right? So they have basically, look at their total liabilities is, $5.5 million, which is offset, that's less than half the cash they had on hand. Granted, they're burning cash, but there's no real debt. Again, I think accounts payable might have been up ever so slightly, but nothing here really jumps out at me. The deferred revenue is not like a real liability. That's kind of an accounting thing. And it sort of is. You'd have to dig into the I have a prior video on about the dimension funding. That's basically what this is referring to, where they sort of borrow the money for revenue for contracts that they haven't actually collected all of the money from yet. That's what that is. What was I going to say? Oh, but again, this is as the end of Q3. As I sort of mentioned up front, this does not reflect the acquisition, right, that they just did in October. They did issue some debt as part of that. This is not super long-term debt. If I recall, sorry, I don't have all the details off the top of my head. I could take a look at this. But they also bought a good chunk of revenue. We don't quite know exactly how much revenue they bought with that acquisition. So they issued debt, but they actually acquired a profitable company, at least they say. I think we should see the final books on that. I was looking up the regulations on this. We should see the final books on what case emergency systems should look like, and I don't know if they'll do this up through Q2 or maybe even Q3. They should at least, I guess, do all of the annual report for 2021 in December. I think in about another month, sometime around Christmas time, I think is their deadline for actually filing that, so that we can get a good picture of what did they actually acquire, right? The press release said that it was profitable. I think the revenue was around, I'm going to say a number, it's going to be wrong. I think it was like $5 million per year, somewhere in that vicinity, in the sense of like it was actually on par with Knightscope's revenue itself. But, sorry, getting to the whole point here is that they actually did issue some debt in order to fund that acquisition, so that it was effectively they didn't spend all their cash to make that acquisition. All right. Wakaza says, also Honolulu Police Department in operations now knows Knightscope. Cool. Cool. Yeah, that's great. And hope they bite. Yeah. And Beef says, sounds positive. Yeah, I think again, the balance sheet here has been one of the reasons why I still have, a good chunk of faith in the company, right? Where it's they are at least managing that well. And if they need some additional runway, this is sort of just my personal opinion or my personal how I see things going. If they do need some more runway as they are starting to scale, before they actually hit enough scale to be just profitable on their own, that they could actually issue some debt as part of that to sort of when they have a clean balance sheet like this and they don't really have any debt, they always have that option to issue debt. And they did issue some as part of the acquisition, but we'll see how that shakes out. And again, I think it was on the order of $6 million in terms of the debt that they issued. I guess it is probably here in under subsequent events. Um, 2022 notes. How much was this? Sorry, I covered it before. $5 million in gross proceeds. But I think it was actually the sticker price for it was higher, right? Yeah, because they gave them a discount of 17%. So I think they're going to pay back something like, $6 million. I don't recall exactly. I did a video on it, read in all the details. I could reread it here. I just don't really have it. At the tip of my tongue at the moment. So, well, Kaza says Honolulu Transit Rail is my next target to introduce a Knightscope. Cool. That's great. Thanks for spreading it to folks. I think hopefully you're. I know you and I talked about this a little bit. Hopefully you're doing that through the Scout program, so you can get a little bit of get paid for that. For giving them some good leads there. Well, Kaza says, "Miss you, Dustin. It's been a while. Ready for the holidays?" Yeah, absolutely, I am. Have you been? I have not been able to do as many videos as I want. Life gets busy. You gotta, job, family. It is what it is. Yeah. All right, I'm gonna keep going through some of this while we chat. But so we did actually go through. That was my next thing, was to talk about their balance sheet, right? And so the punchline there, as I mentioned, is they do have no new debt, at least during the quarter. And $11 million in cash still remaining. They are burning through cash. Make no mistake about it. And they actually, this number is up a bit, right? The receivables were down, which helped push that cash position up, right? Although they also had higher prepaid expenses. So hard to say what all that entails. I don't think they went into details here. Yeah, there's no sort of paragraph explaining what that is. So we don't really know. But anyways, not that big of a deal. Now, one thing that, also helped their cash position is that they are actually selling shares here, right? Selling those shares because, they have this committed equity facility, they call it, where they have this agreement with B. Riley, and B. Riley will buy shares from them. They can issue this from time to time. And throughout this particular quarter, they sold about $1 million worth of shares. They sold 323,298 shares. I think it is explicitly, 323,298 shares of Class A common stock. They got just under $1 million, it looks like, from that. So that's a rough average share price. I could do the division here. I didn't save it. It's about $3, right? 973 divided by 323.298. So almost exactly $3 here. So at least it wasn't, it's not at their lows, but it is what it is. They are, they're certainly not issuing tons and tons, but they are, periodically issuing this and raising some capital from that. So, I mean, as much as I'm not crazy about the dilution here, it hasn't been horrible so far, right? I think for the quarter, that would have been about, compared to the fully diluted share count, that's like 0.5% of the fully diluted shares. Because I think I did the calculation here. They're at the end of the quarter, their fully diluted share count would have been 64.3 million shares. Again, that does not include anything from the acquisition, right? From the acquisition, they issued both warrants and convertible debt there. Well, Kaza says, no scout program, just want my community safe. That's commendable. Very, very good. And well, Kaza says, doing good, getting ready for hernia operation soon. Man, well, good luck with that. I've never had that myself. It sounds like just good luck. I hope it goes well for you, and I hope to see you back on here after saying that it all went well. So that will be again. Hopefully it goes well for you, and hopefully you can get that done, as you said, soon. Hopefully, yeah. All right. Let me see what else that I have to say. Oh, one quick note, and I alluded to it here, where in their backlog they did talk about the case units, right? They said they had 240 units in the backlog representing $1.4 million of revenue. So I thought that was interesting. We have sort of our first look at how much those bring in. If you divide that out, I think it's roughly $6,000 per unit. What it didn't talk about here, and I think I mentioned this already, it didn't talk about what if there's a subscription component to that, a service contract or something. So that will be interesting. Again, we'll find that out later on when they release more details about the acquisition. Couple other things here just to note. Actually, just one other thing, and then sort of my closing comments. I was not super thrilled to see that sales expense was up, and they talked about the, let me see, increased public. Let me get the right. Yeah, so for the quarter, sales expenses were up, by $1.2 million, compared to Q3 of last year. But they say the increase was primarily attributed to $1 million in commercial advertising expenses designed to increase public awareness of the company and its products to potential customers and investors, as well as the Robot Roadshow. I think the Robot Roadshow is great. What they don't split out is how much of this was due to advertising, how much is due to the Roadshow. I think the Roadshow is again, from my experience, looks like it's more direct towards sales and more direct towards actually getting folks to see it and consider buying. I wish they would, again, they don't really split it out, but I sure hope that not too much of this was actually commercial advertising. Just because at this point, I think getting, firm orders is good, but something more speculative like, commercial advertising definitely just seems like it's not really the right use of money, while the company is actually burning cash, and certainly right now it doesn't seem to have a shortage of sales. Maybe I'm wrong. Maybe they are actually getting some sales from that advertising, but given all the stops I've done on the Robot Roadshow and the volumes, certainly seems like that could be, much more promising sales channel for them, at their current level of scale, and that they could actually ramp up the advertising in the future after they, sort of need to grow at a higher pace, and they've actually already got a base of robots deployed, and so there's some sort of some familiarity for a good chunk of folks already. Anyways, that was most of what I wanted to cover. I think the big thing for Knightscope that's holding it back as as what would be a wildly profitable company, clearly it are their margins, and we unfortunately just don't have a lot of insight into that. I try to grab these numbers every quarter for what they do disclose, and it's not that much. I sort of this was a copied over number in terms of what I think their rent cost is in terms of the cost of revenue. Again, their cost of revenue, if I didn't call it out, it was about $2.2 million for the quarter, which led to their negative 70% gross margin. And we know that about 400,000 of that was depreciation. So that's a non-cash expense, and a good chunk of this was also stock-based compensation. So I guess it's only $85,000. So I don't think that's, I guess I did pull that out. And then some of this are service fees to Konica Minolta. Those are the technicians who actually will service the robots on site. They have that agreement there, but that leaves, the vast majority of this, about 68%, 69% of the total cost of revenue as things that we don't really know what it was spent on. And since we do see this cost of revenue continue to go up, it's really hard to really see what's going on here. I wish they would give more indication there. They have some generic statements of how they think they're going to improve this. And it basically all boils down to, better processes and just scale. And again, to me, that is still a credible answer. I'm starting to get a little bit more skeptical since we did see revenue up quite a bit this quarter and we haven't seen the gross margin improve. So again, really hoping that happens. And a couple things that could improve there would be, they've talked about this 5th generation K5, which is supposed to actually be deployed this quarter. They talked about how that is going to be better designed for assembly and better designed for service. So hopefully that will reduce the costs, and therefore improve margins. And I would also guess if they start getting some deployments of the K1 hemispheres, I would imagine those are going to be, smaller, lower service cost machines. And so that, lower cost should hopefully help the margins in the future. So we'll see. I haven't really, I'm not getting worried at this point, but I am a little, it's the margins didn't go in the direction that I would have expected given the revenue increase. So we'll just have to wait and see on that one. So, all right, that was everything that I had to go through today. I don't know if anybody, if either of you, if anybody's still on there, have any questions or comments, anything you want to chat about. If not, I'm gonna hop off. I'll give it about a minute to see if y'all have anything else to say. But that was all the stuff that I wanted to talk through today. I mean, overall, it was a mixed quarter. I think that the headline number of the revenue increase was definitely positive. Well, Kaza says, thank you again, Dustin. Mahalo and happy holidays in case you don't hear from me for a while. Same to you. Good luck on your operation. I hope it goes really well for you. I hope you're able to recover quickly. So, all right. Hearing nothing else, reading nothing else, I should say, I'm going to hop off. Thank you very much, Beef and Wakaza, for tuning in. I appreciate it. Some good discussion here. I hope to see you later. Take care.